31st of January 2013, market form a narrow range bar down 3.83282. Volume has slightly picked up. Generally, we do not like a down bar with high volumes. This is slightly negative. Today, markets managed to make a new intraday high of 3290. It was last traded at this level 2 years ago. If you take a look at the weekly charts, pretty obvious. We have a big consolidation patterns here, and we'd like to see it eventually take out this high here of 3313. Now, in order to do so, we need to see a picked up in volume, but currently, if you notice, the volume has started to actually reduce, and this is generally no good. The market may become range bound, and I would like to see final attempts on this resistance here with good volume. So again, unless volume picked up, it will be very difficult to actually break this resistance here. Because this has been tested on several occasions in the past, so it presents a challenge. So over here itself, if you notice, markets has been actually trading quite strongly. Usually we do not expect markets to actually do this. After a period of runs, it's more likely to consolidate. If you were to look at the sector indices, in particular small caps, mid caps, and the catalyst, as well as the all share, notice today actually we have a pullback, but generally the pullback volume is slightly lower. This is your catalyst. Same for the small cap stocks. Today we have a pullback bar, but volume is generally low. This is healthy actually. This is mid-cap stocks, again slightly lower volume. This is our all shares. Again, today actually down bar has slightly lower volume. So on the broad market basis, market is generally healthy. But again, as I mentioned, market doesn't really run in straight line. After a period of runs, it's more likely to consolidate. So this is something that is due. And especially now the STI is approaching the significant resistance of 3300. So it's important to watch out picked up in the volume. And meanwhile, on a shorter term basis, it will be better to trade the small cap and the mid cap stocks. Blue chips, there are only few stocks that are currently running, and most of the blue chips doesn't really perform well. And it will be better to focus on stocks that has just started to actually break up to form a new trend. Some of these stocks include Intera, UE, ENC, you have Tak Hong. So stock like this who are actually beginning a new trends will provide you better potential.